Welcome to another edition of June, Wrap the Month. Stocks were good. Bonds were basically flat. Yield curve still inverted. Sentiment positive. Huh? Let's jump into it. Okay, so let's see how we did in the month of June. Pretty much all in all, good month. Stocks were up. Bonds were basically flat. So let's see how we did. Month of June, S&P 500 was up 6.49%. The NASDAQ composite was up 6.55. Small caps were up 8.6, and the Vanguard total bond market was, like I said, flat. It was down negative 0.22, as you can see that down here. So all in all, really good month of June. Had a rebound from, not so great month in May. I mean, that's why sometimes when you're talking about markets and stuff, how we feel sometimes is not reality or it's not reflected in really how the markets are performing. So, again, month of June for those three indices, S&P 500, NASDAQ, Schwab small caps doing really well, small cap indices. And let's see how the individual holdings that we have. So we've got the S&P 500, the cap weighted ones up 6.49. The S&P 500, which is in predominantly most of your portfolios, was up 7.67. Vanguard dividend appreciation up 6.51. Schwab US small cap 8.6. Vanguard total international stock for the month of June 4.44. International small cap up 3.9, and bonds, which are kind of all over the place lately, is yields and interest rates, which we'll get into later when we jump into the bond section. But you can see the short-term bonds were off 0.54, the total bond market, which is more intermediate, off 0.22, and the international bonds was basically flat. Now when we get into how we're doing the past 12 months, so for the past 12 months, basically from July 1st of 2022 to June 30th of 23, S&P 500 is up 19.4%, NASDAQ is up 25, small caps are up 14, and bonds are off almost 1%, as you can see down here, negative 0.74. Again, as we go through the individual holdings, S&P 500 19.49. Where we are seeing some underperformance in our portfolios is small cap companies and mid cap companies. And our equal weight is underperforming the past 12 months. So our equal weight RSP is up only 13.5 compared to 19.4. For the market, Vanguard dividend appreciation 15.57. US small caps 14.03 for the past 12 months. International stock, Vanguard 12%, international small cap 10.6, and bonds, short-term bonds off 0.24, intermediate off 0.7, international bond, again, just up almost 0.5% during those past 12 months. Year to date, same drill. Year to date, S&P 500 is up 16.79%. NASDAQ's led by a few high-flying. NASDAQ is up 31%. Small caps 8.86. Again, you can see the discrepancy between the larger cap, like the S&P 500, 16.7, almost doubling the small caps. And stock year to date, with everything that we've been talking about and going through, is still up about 2.4%. So we'll take that. We do need a bigger bounce to kind of make up for the 2022 losses, but that's where we are. Again, S&P 500, 16.79. Again, really big discrepancy is kind of what's going on, which is alluding to some of our underperformance. Is we got 6.3, we got 6.93 on the equal weight versus 16.79. We are seeing that kind of reverse a little bit, but that's where we are right now. Vanguard dividend appreciation year to date 8.03. US small cap Schwab 8.86. Vanguard total international stock 9.86. So international is doing well. Most of our stuff is doing well. International small cap 7.83. Short-term bonds 1.27. Intermediate bonds 2.42, and the Vanguard total international bond 3.77. Again, like I say every month, this is one of my favorite charts to look at because this helps us measure the breadth of the market. Although I can see something happening a little bit in July, but we're not getting to July. That's how fast information moves. But let's just stick to the month of June for right now. So month of June, we spoke the past couple of months, the 50-day moving average and 200-day moving average lines. If prices are above those two lines, those are good market positive breath. And we're seeing here, we're well above the 50-day and the 200-day moving average. Here's a new indicator, which I don't think I spoke about much before in a couple of videos, which is called RSI right here. We can see RSI, which is short for relative strength index. What relative strength measures is kind of the strength behind the market. And we're probably going to see this more in July when we do July's wrap the month. But what we're seeing, what relative strength helps us do is figure out the strength behind the market. So even though sometimes the S&P 500, the market keeps making new highs, what we're trying to understand in the short term, from a short-term trading standpoint, is there strength behind those new highs? Meaning, is there a lot of momentum? Is it a broad market move, which gives you, higher relative strength, or is it just kind of a couple of stocks in there? But as you can see, kind of anything under the red line here, 30, means that we are oversold, which can indicate a buying opportunity. And anything above the green line, which is over 70, can indicate we're kind of running a little bit hot and we may be overbought. Right now, we're kind of bumping up to that 70% line. So all in all, relative strength is pretty good. S&P 500 percent of stocks above the 50-day moving average, we're at 74%. Above the 50-day moving average, we're at 66% above the 200-day moving average. Bullish percent index is 66. S&P 500 made about 16% new highs last month. Now we've got the NASDAQ. NASDAQ is kind of the same picture. We are well above the 50-day and the 200-day moving average, so positive strength there. Again, relative strength. What you're seeing here is, even though the NASDAQ is flying, you are seeing the relative strength is not as strong behind it. And again, the reason for that is it's a few stocks that are really bringing up the average. And you can see here that only 54% are above the 50-day moving average, and only 41% are above the 200-day moving average. So again, something to keep in mind on our index numbers are performing well. The overall strength behind the market is a little bit more questionable. As we see here, as we compare every month, we compare value versus growth. They're different types of investments, different types of strategies. We overweight towards value. Value is typically companies that are, a little bit cheaper in the marketplace, pay a higher dividend. Growth are your more tech-oriented companies. So those represent different trends in the marketplace. As you can see here, the Russell 1000 underperformed the Russell 1000 growth by about 0.09%. So nothing crazy. Both had a really great month. The Russell 1000 value was up 6.61 compared to the Russell 1000 growth, which was up 6.71. And that's where you see that 10 basis point discrepancy. Offense versus defense, consumer discretionary versus staples. Discretionary is things that people buying that they don't need to buy. That tends to be a positive trend for the marketplace, where you have staples are things that you need to buy, like toiletries, toilet paper, food. It's typically, if you're in an offensive market, if discretionary is outperforming staples or vice versa. And what we're seeing here for the month of June, again, we're seeing discretionaries outperform staples by about 2.3%. Consumer sentiment. This is interesting. So this was a new chart that we added in last month. What consumer sentiment is this is the University of Michigan Consumer Sentiment Index, where they go out and poll people on how they feel about the market. For June, the June number, we're at 64 compared to where we were in May, which was 59.2. So we are in more of an uptrend from kind of where we were in 2022, which we can see down here was 50%. Now, a lot of you are thinking, and I'm also thinking too, and I was speaking with a buddy of mine who's a colleague, and we're kind of, it's interesting to see these numbers, because pretty much most of the people that we're speaking to are not that bullish. There's a lot of different reasons for that, but this is, based on the University of Michigan Consumer Index, Sentiment Index, and other sentiment measures that I follow and look at, we are trending upward from at least where we were in the month of May. So we're from 59.2 to 64. Now let's jump into bonds and yields. Yield curve is still inverted. You can see here we're inverted. We can look at where we are with yields right now. So our 10-year yield is 4.06 compared to our 2-year yield, which is 4.94. So the inverted yield curve, which we just looked at on the last page, takes these two, and if it's inverted, you'll see it below the zero line down there, which we saw, which just essentially means that we have this chart, which is flip-flopped. Normally, if you see here where my mouse is pointing, you can see that the 10-year over here back in 21 is above the 2-year, which makes sense, right? You would normally be compensated higher from a yield interest rate standpoint the longer you go out on the curve. But right now, red is higher than green, which means our inverted yield curve still exists by, almost 80 something basis points. Again, the 2-year treasury is 4.94, where the 10-year is 4.06. Okay, so another yield measurement that we look at is we look at the 10-year versus the 3-month, and this is even more inverted, more upside down. So you're getting 5.46 on a 3-month and 4.06 on a 10-year. Again, that is crazy. That is unheard of, but that's where we are. All right, that does it. That's another Wrap the Month for the month of June. Thanks for hanging out with us. Hope you found it helpful. Again, any other charts or information you'd like to see, please hit me up. Let me know. If you could like the video, that'd be great. The more likes we get, the better views we get from YouTube. Plus, it makes me feel good. It's always a positive. So that's it. Until next time, see ya.